Kangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Well, good afternoon to you and welcome to the COB. I'm Nadine Blaney. Great to start this trading week with you, and what a start to the week it's been. Of course, big falls across many markets, particularly here in Australia today, in the wake of the beginning of a trade war, really. I mean, what else are you going to call it? 25% tariff slapped on Mexico and Canada, as you well know by now. 10% additional tariffs on China, and the US president taking aim at Europe as well. The local market, at least the COB Australia index, is closed down by 1.85%. The Nikkei is down by 2.8%. The Hang Seng, about 0.75% right now. And looking at E-minis in the US, pretty dismal. S&P 500 E-minis at this time down by 2% and 2.7% for the NASDAQ. So US dollar strength has really crashed some other currencies, including the Australian dollar. Trump's tariffs being also, it's one of our key themes being felt in energy markets. We are seeing some particular company announcements related to the impact or likely thereof of this tariff announcement. And it's put pressure across many sectors. That includes what we saw in the materials space today, and banks also under some pretty significant pressure. Now, retail sales for the month of December were released today here locally at 11:30, along with building approvals, which rose by 0.7% in December. Retail sales, look, it wasn't a bad read. In fact, the Cyber Monday sales, which fell into December, helped to buoy sales through the month of December. Still, though, that was not enough to bring the retail space into positive territory. Let's take a look at some of these key sectors today. Wesfarmers off by 2%. Harvey Norman down by 1%. Lovisa down by 6.8%. Lovisa was on today's episode of The Call, actually, with Kai Chen from MPC Markets and David Lane from Ord Minnett. If you like podcasts, you can go and listen to that one, or you can check out the series on demand on our website, ausbiz.com.au. Now, I mentioned that we did see pressure coming through on the major miners. Rio Tinto has aluminium assets in Canada. BHP is developing that big potash development in Saskatchewan in Canada, but really it's just, what does this mean? What does this mean going forward for Trump's plans? I mean, so much for the art of the deal. I think many in the market were caught off guard by the fact that he went so high and so hard, and that we're seeing these retaliatory tariffs around the world. Of course, China's still on holidays for the Lunar New Year, but you can see the damage that was done across the space, including Fortescue and Mineral Resources, which was down by pretty punchy 5.5%. So there really wasn't anywhere to hide in this market today, and that includes with the big banks all weighing on the market. Percentage terms, Westpac the worst performer. Well, it was neck and neck, really, with Macquarie Group as well, down by 2%. Interesting to note, I did have a chat with Junbei Liu from TenCap earlier today. She still likes Macquarie Bank, and if you find that interview on our website, you can also find what other stocks she's pretty positive about heading into reporting season. I do like to tease you a little bit. Look, we don't have the full picture, I don't think, coming from Australian corporates as to which ones will be hit, how much, but we did hear from a couple of companies today, and that includes Fisher and Paykel. Shares were hammered, down by 7.5%. Gross margins going to be impacted because it does manufacture in Mexico. Satire absolutely plunging, down by 20%, even though it said it only, its words, has 7.5% of gross sales in the United States manufactured in either Canada, Mexico, or China, but the market doesn't like it. And Austin Engineering has claimed that its U.S. business is shielded from U.S. tariff impacts because of a repositioning it started 9 months ago. But it does increase supply costs, should be offset by lower freight costs and lower steel costs in Canada compared to the U.S. Fisher and Paykel was the stock of the day on the call. Here's what David Lane and Kai Chen had to say.
really with Fisher and Paykel Healthcare, they've been looking at the US as their big growth driver. They are involved in a lot of US hospitals there, and that's been one of the reasons why we've seen that share price rally as much as it has over the last 12 months, because of those growth expectations from the US. The company is now trading, even after today's sell-off of about 6.5%, they're trading at a PE of about 115 times. So the market has been really pricing in that long-term growth from the US market.
So, like about 30% of their revenue stream is going to be affected by that 25% tariff. So it's not a small chunk. And in terms of trying to relocate, it's not an easy thing. There's so much infrastructure, and if you were to relocate to another country, it's going to take years to kind of rejig that setup in terms of the supply chain. So I think, in the short term, absolutely, it's going to Fisher Paykel is going to take a hit.
So let's get a view on all of that with Josh Gilbert from eToro. Josh, nice to see you. I haven't had a chance to chat with you in quite some time, and how things have changed. Trump getting really serious about really taking on the world.
Yeah, no, absolutely. Yeah, great to see you as well, Nadine. I think that's really it. And I think that's why we are sort of seeing markets react in the way they have. I think we've all been a little bit shocked by the sort of the speed of the sort of tariff roll out and the sort of the implementation of it, the aggressiveness that sort of come from it. And I think that has put markets on the back foot. Although I think markets knew that this may be coming. We still have markets trading at sort of record highs. Obviously, we had that bit of a move last week from the sort of DeepSeek saga, but I don't think markets had really sort of priced in the sort of the negative effects that may come from that, and we're certainly seeing the effect of that already. Obviously, these days, crypto is a very early move or a very early sign of sort of what we can expect from risk. And obviously, with the trading over the weekend as well, that was sort of that early look that we got at that. And we're certainly seeing the correlation between sort of Bitcoin and the NASDAQ certainly pick up. So that gave us a very early sign as to what to expect. And we're obviously seeing that come through in the local market today, and obviously US futures as well.
Yeah, absolutely. I mean, it's not often that I see US futures coming under so much pressure. So when you guys are talking there at eToro as to what impact shockwaves through the stock market could have on, the conversation going forward, will it give Donald Trump, in your view, pause for thought, or is this an ideological fight that will be continued, to the bitter end, wherever that might be?
Yeah, well, look, I think what's really interesting with Trump is that in his sort of first term as sort of president, he was, his sort of, I think his view of how, well he, did as a president was sort of focused on equity markets. And that was sort of his barometer of success, if you like. And he actually has come out and sort of said that, he doesn't actually care about sort of the impact on markets in the short term, and that will be sort of just short term pain. So I think if he does sort of take the same view this time around, then maybe we may see him backtrack a little bit on tariffs potentially, especially if he's looking to sort of restore a little bit of confidence back into sort of equities. I think, as we say, it is that sort of sweeping changes and the sort of the scope of it that's sort of affecting markets. From our side, it's obviously we're seeing that a little bit of investor fear sort of come through. That's coming from this idea of, inflation sort of rearing its head, that dollar strength coming through, rates staying higher for longer, sort of that geopolitical risk picking up, then that view of supply shocks coming through, margins and earnings then sort of being affected, all along all sort of down the line. I think that's the biggest impact. Although speaking, through our sort of clients today and sort of really asking them, right, asking the retail investor sort of what they're thinking, putting the word back in their mouth, we sort of said to them, okay, look, how are you seeing this? Are you seeing this as an opportunity to sort of take profits and then maybe sit on the sidelines, de-risk, or will you see this as an opportunity and look to buy any dips that come through? And a big resounding answer was that they would be looking to sort of, buy dips and find opportunities where they sort of do lie, which was pretty interesting because I think that just shows that markets have become a little bit more, I'm trying to think of the right word, but a little bit more susceptible to, this sort of risk element of it. But I think retail investors themselves, have actually sort of come around to this idea that we are going to see sort of market dips, and that emotion is something that we need to sort of take out and sort of focus on that long-term picture.
Yeah, quality came to this fore in many conversations I had today. So Bitcoin below 100,000. I mean, it wasn't, let's face it, that long ago that it lifted above that mark. So is there anything, really to take stock of if you are a crypto investor?
Yeah, look, I think the biggest thing here is to sort of try and remember that we are always going to sort of see that macro impact for crypto assets, particularly when we sort of see that correlation rising. Of course, for a long time there for crypto investors, there was a lot of positivity because, as we know, Trump is very pro-crypto. We're seeing a change, obviously at the SEC. Obviously a lot of that is going to be around, making a better environment for digital assets, for them to thrive, better regulation, better frameworks in place. But at the same time, what we have sort of been saying is that, yes, he's very positive on one side, but at the same time, if what we are seeing from Trump does sort of reignite inflation, does keep rates, sort of where they are, then that is going to be a negative for risk assets, and that doesn't sort of get any more risky than what you can see in sort of crypto. And I think that today is a great reminder of that, that this is a risk asset. Yes, we believe it deserves a place in an investment portfolio, but that volatility isn't going to change. We saw sort of Ethereum down as much as about 30% at one point during today. So lots of positivity, longer term, coming from Trump being in the White House, but also in the shorter term, if we are going to see investors de-risk, crypto is probably one of those assets that's likely to be first on the list.
Cool. Now, we have not talked about big tech earnings just yet. We've still got some behemoths to come. Talk to us about your expectations.
Yeah, look, it is going to be a pretty big week, right? Especially after what we saw last week from DeepSeek, and we maybe had a little bit of negativity coming from some of those sort of tech names, valuations sort of coming into question. Obviously, that Nvidia fall was, the big talking point of last week. Maybe with Apple on Friday, that was a bit of a shock, I think, just because earnings actually weren't that great, but markets tended to focus on slightly positive forecast on revenue guidance. For me, I think with Amazon and Alphabet this week, Amazon is one of the biggest capex spenders out there. For them, it actually could be pretty positive. These sort of China tariffs, again, they've been sort of competing against Temu in the sort of short term. So I think for them, this could be a big positive. Obviously, seeing investors or seeing consumers looking to sort of buy back locally, and if we do see those sort of Chinese imports affected by those tariffs, then again, big news for Amazon. But really the focus across those sort of tech names, Alphabet and Amazon, is going to be on sort of cloud growth. Both of those names alongside Microsoft are sort of the dominant cloud names. CapEx, again, will be in focus. And I think CapEx probably on these two names right now will be pretty important. Amazon is one of the biggest big tech spenders. So across those two names, if we are going to sort of see margins and earnings coming under pressure, CapEx rising at the same time doesn't make for a great mix. So that's going to be really interesting to see there. And of course, it's going to be around AI, particularly for Google, Gemini. If people use Gmail and Google Docs, you'd have seen that sort of rollout of Gemini really coming through over the last sort of couple of months. So it'll be really interesting to see how that is, really affecting their bottom line, and if it is sort of generating, a decent sort of earnings bump for them, because we have already started to see Microsoft do that as well. And then finally, we've also got AMD coming through also. So it'll be pretty interesting to hear from them, what they think about sort of DeepSeek and obviously how they're sort of really going up against Nvidia in this market.
Well, Josh, it's been great to have a chat with you. Thank you so much for getting us across that all. We appreciate it.
My pleasure, Nadine. Speak soon.
Yeah, and to Josh's point, currency markets were where we were seeing a lot of the expression of the uncertainty right now. The Australian dollar absolutely smashed today. And it's currently trading at, if we can bring that up on screen, just about 61, I believe, US cents. Come on, you can do it. Yeah, 61.1. Okay, and not on that list was the Mexican peso. Obviously, it's getting smashed, and the Canadian dollar versus the US dollar. Now, apart from tariffs, believe it or not, there was some other news. Sigma had its chemist warehouse merger approved by the ACCC. ASIC has begun an investigation into ASX following that trading outage on December the 20th. And Westgold Resources lowered its FY25 guidance. boy, we're really searching for any positivity. West Gold was down by more than 12%. Now, we also had a bit of corporate news in the smaller end of the market. Some better news here with Findi up 9% after Tata's acquisition was approved by the Reserve Bank of India, that acquisition it made from Tata. McMahon had a $50 million contract win. Self Wealth got a non-binding indicative proposal from Savah, which is an improvement on the previous offer on the table. Hansen Technologies lifted as it signed a new contract. And so, nice to see that as we take a look at the market leaders by percentage terms. Linus, Boss, Regis, Star Entertainment, JP Morgan staying on the register, and Ramelius. The laggards, though, we do have West Gold Resources, as I just detailed. Magellan, Zipco continuing the selling from last week, down by close to 8%. But Junbei Liu still likes this one. She calls it quality. Fisher and Paykel on the tariffs, and Lavisa off by 7%. In the small to mid-cap space, there's Findi and Terry's Technologies, which is up by 7%. Motorcycle Co. Holdings up by 6.4%, and Vinyl as well. Keep in mind these are some small cap companies, but we do have pressure being seen on MedAdvisor, down by 5.5%, but the worst performer by percentage terms in this list, MTM Critical Metals, off by 15%. Yeah, it was pretty dismal across the materials space. Now, we do have quite a lot of data on tap this week. Tonight, we get inflation in the EU, we get construction and manufacturing data in the US. Of course, manufacturing is, well, what we're told all these tariffs are about, and FOMC member Bostic speaks. So we'll see what he says about tariffs, if anything at all. Here tomorrow, we get monthly household spending. That's about it. And we'll be keeping our eyes out for any of those early reports that are trickling in. We did speak with Argo Investments today. They were out with their results. And yeah, looking forward to all what this earnings season will bring. Sort of looking forward to drawing a line under today's session, though, with the S&P ASX 200 down by close to 2%, 8,379, after hitting that record high on Friday. So again, Satire shares plunged, Fisher and Paykel plunged after they were specific about, the tariff impact. Mineral Resources slumped on that Trump tariff, and also Bell Potter cutting its price target. We also saw Origin Energy shares falling as we saw their price target cut there. And also, I think it's worthwhile mentioning that we saw ResMed shares fall today after Macquarie hiked its price target. So just showing, just how touchy things are out there right now. Volatile. Opportunities lie, though, in volatility. And we will get you across more of the opportunities on offer when we are broadcasting live once again on ausbiz.com.au from 9:45 tomorrow. In the meantime, you can catch up with anything you may have missed, any of those interviews I mentioned. Tana Pelosi from Ontario's capital is another one that just gave some really great insights into the potential impact of tariffs. So yeah, I hope you can catch up through the overnight period, and we'll see you tomorrow.